Welcome back to the channel. Today we're going to go in depth on exactly what's inside of a mortgage payment and what you can expect when buying your first home, or maybe it's your second or third home. All right, so the first thing that we're going to want to do is we're going to want to find the home that we're looking for. So I'm going to go to tshumanhomes.net. You can look up homes here. You can create an account. You can find anything about buying, selling, about the markets, featured listings. You can get an evaluation for your home on here, and it has a mortgage calculator ready to go for you. So we're just going to go up here and we're going to search for a home. So we're going to put in everything in the bottom right here that we're looking for. So we're just looking for a pretty normal house, and we're going to look in Georgetown since it's the fastest growing city right now in Texas. So then it's going to come up with multiple different houses up here for you. So we'll do a pretty normal one. All these ones look pretty good. So let's do this one. 325,000, 3 bed, 2 bath. So it's going to come up here. It's going to have all your listing photos and it's going to have everything that you need. So 3 bed, 2 bath, almost 1,400 square feet. So now we're going to figure out, okay, this home, 325,000. This says the payment is estimated at 1,241 per month. This is not correct because it doesn't have all of your details in it. So the best way to find your payment is going to be going to either the mortgage calculator on the website, or you can use just search any mortgage calculator on Google, and anything should work out for you pretty well. All right, so we're here at our mortgage calculator. I just Googled a mortgage calculator and Bankrate was the first one that came up. So we'll go ahead and use this one. So when looking at a mortgage payment, there's a bunch of different factors that go into it rather than just a rent payment. You pay one monthly fee, and basically that's all it is. You have any repairs, the landlord fixes it. It's very straightforward. Mortgage payment is going to be different. So you're going to have your principal and your interest. Your principal is going to be the amount paid towards your loan. So that's how much each month that's actually going towards your loan. The interest is going to be how much is going, how much interest you accrued. So if you have a 7% interest rate, that 7% is going to be going towards that. Property taxes are going to vary basically by county. So every county is going to have a different tax rate. So we'll figure out what the taxes is on this one and we'll plug it in. Home insurance, this is going to be different for everyone. Depends on your area, if you're in a flood zone, anything like that. So these are all different factors that can change everything for you. Your PMI is going to be your private mortgage insurance. So anytime you put less than 20% down on a home, the bank is going to ask for an extra insurance for their loan, basically. So that's going to be an extra fee that's on top of your mortgage payment. That ranges anywhere from 50 to 200 bucks. I mean, I mostly see it around $100. And then your HOA. So if you're in an HOA, these fees can vary. Texas, they're a little bit lower. I know California, they're super expensive. So like I know our HOA is $300 a year, so it's not too bad. So and then this is how you come up with your total monthly payment. So if we're going to go back and do the calculations for that home, so the home was $325,000. So I'm going to put in $325,000. So typical down payment. We're going to do a typical down payment. Texas, we're going to use. Let's say we're using a conventional loan. So we're going to go 3% down. So almost $10,000. You're going to do a 30-year loan, which is normal. Interest rates in this market right now, we get about a 7.2. Always buy down the rate. You can always go with a new build and get cheaper interest rates. I saw the other day that somebody was offering a 5.8 straight across for 30 years, or you could do a 2-to-1 buy down and get 3.8 for 2 years. We'll put in the zip code. And then this is the part that everybody always forgets is your optional taxes, insurance, and HOA fees. You need to put this in because this is going to change this payment dramatically. If you don't put this stuff in, then you're going to be cheating yourself basically because your numbers aren't going to be correct. So we'll do an average credit score. We'll say 700 through 719. Property taxes. So this home had a property tax of 1.6. So to find the property taxes, it looks like Bankrate doesn't have it. We're going to go back to the website. This one also has a pretty good calculator. It's just a little bit more basic. That's why I want to use the other one. So we're going to put in 1.6%, and it's going to give you $5,200 a year. So that comes out to about $433 a month. So we'll come back over here. 433. Home insurance, 66 is about right. PMI, we'll say about $100. And let's pretend you have a $25 HOA fee per month. So now, with interest rates the way they are, this is going to be your monthly payment for for right now. So 2,763. This is a much more realistic breakdown compared to 1,241. All right, so let's play around with the numbers a little bit more because now we know exactly where we're at and now we know how much we can afford. So we're going to go back over to the mortgage payment calculator, and let's say that we decided to put a lot more down to get our payment cheaper. So if we put, let's say we're going to put $10,000 down. Okay, we'll do 5%. Let's say we're going to put 5% down. Your down payment of how much you put down only changed it not by much at all for an extra 2%. So for almost $5,000 more, that only dropped it by about $50 a month, which isn't a lot at all. That's why I always tell people, if you don't have a lot to put down, if you have less than 20% to put down, you might as well put down the least that you can put down, because it's not going to change your payment much by much at all. So what you could do best is by buying down your interest rate. So if you're at a 7.2 interest rate, that's your payment. So let's say you ended up getting that 5.8 like I saw, and you go with that builder. That's going to be your new payment now. So that's going to save you over $300 a month just from getting that cheaper interest rate. And you can always refinance your loan too. Obviously, the market's a little crazy right now and we don't know what's going to happen. But in the future, you can always refinance your loan if rates end up going down. So always focus on your interest rate rather than your down payment as much. And then there's different types of loans that you can do. VA, you don't have to put anything down. So if you were to put, let's say you put zero down, let's say you're doing VA right now. We're going to do 0% VA at a 7.2 interest rate. That's going to be your payment. So yes, you're going to go into it not putting anything down. That's going to save you that 9 grand going in. However, your payment's going to jump up by about $100, and you're going to end up at almost $2,800. So everything, all the numbers play out with each other. It doesn't really matter how you use them. It just matters that you put them in accurately. So that's how to find out what's exactly going to be inside your mortgage payment. I hope you enjoyed today's video. If you have any questions, make sure to reach out today. Don't forget to subscribe to the channel, and I'll see you in the next video.